Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the TGI. Thank God it's Friday, the 28th of March, Bull versus Bear webinar. Steve Miley here on the Call for Trade Day. Welcome, everyone. Go through our usual run through in here today. Going to go through the calendar, what we've had, what we've got coming up. We'll take a look at articles from the major news wires. What are the geopolitical, what are the fundamental macroeconomic, central bank factors that are influencing financial markets right here, right now. And then we'll take a quick look at the charts. Again, as I've been saying pretty much most of this week, not much to say in here, all about tariffs. For those of you who were around under the last Trump administration, this was really the tail of the tape. Heightened volatility, unknowns, vagueness, causing erratic market moves, and increased volatility, increased wider ranges in here because we just don't know. Getting mixed messages, tariffs on, tariffs off, might do tariffs here, might not do tariffs there, extra tariffs, fewer tariffs. This is what happened last time. Most of it was, not all of it, but a lot of it aimed at China last time. But this erraticism, and then obviously in the last presidency under Trump as well, we had a lot of I don't know how to phrase it best, but there was a lot of other stuff going on, right, with him, with the impeachments, etc. So there was a lot of swings in here, and that's what you're going to be getting used to for the next now 3.75 years. It's likely to stay the same as this. And the data underlying data is obviously important to tell us where the economies are going. But, often day to day, the data gets washed away by the noise of what's going on the geopolitical front. And then to add into the mix, at the moment, we've got everything that's going on with regard to Russia, Ukraine, and all the unknowns around that. But let's focus in on the data. It's going to be brief in it because all the headlines are just tariff uncertainty. That's all the headlines across Bloomberg and Reuters. So this morning, the UK, we had some positive data in here. Retail sales, you can see in green, better than expected. GDP data in line and better than expected across the board for the UK. And then in Europe, we had the GfK consumer climate data out of Germany, actually, which is slightly worse than expected, so a slight negative there. French CPI, though, you can see inflation data slightly better, red meaning lower, so better inflation preliminary data out of France. So slight positives there. German unemployment change actually slight negative. So mixed data out of UK, Europe so far this morning. Switching the focus to what we're going to look at for the US session today in just under an hour, 8:30 Eastern time in here. We get the core PCE data in here. This is the month-to-month, year-on-year data. This is the important measure, far more important than what we saw yesterday, that quarterly data looking significantly back. This is the February data in here. Remember, this is the Fed's preferred inflation gauge. So it's an important piece of data. We're certainly watching out for that. That comes in just under the hour, 56 minutes from now. The PCE price index data month on month, year on year. A little later on today, don't forget, we do get Michigan and consumers' confidence data in here, consumers' expectations, sentiment data, 10 o'clock Eastern. And then at 12:15, Fed Vice Chair for Supervision Barr is speaking. So all of those important, but the most important, certainly in just under the hour, the PCE data. I'm just going to quickly refresh this because this hadn't updated in here. So just looking back to yesterday, actually, we did have that too. Sorry, this is looking back to yesterday, we had the GDP data. US economy grew by 2.4. Last quarter was corporate profits jumped in here, faster pace than previously estimated, but it didn't have a really big impact on markets. Why? Because it is so backward looking, right? It's such a backward looking piece of data. This was for the fourth quarter of last year. We're about to enter the second quarter of this year. So because it's so backward looking, and since then, obviously, there's a lot of change, right? We have a new administration. So a lot has changed since then. So the market kind of, overlooking this, got initial little reaction, but market kind of overlooking this. I'm just going to kind of really refresh this because I didn't see. Oh, here it is. It's loaded in now. I think the Good Morning. The Morning Briefing Americas. So look, it's all about Trump and tariffs. Trump tariff campaign creates more inflation worries. So inflation worries because of ongoing tariffs in here across the board. It's just causing real concerns in here. That's really dominating headlines in here and continues to dominate headlines in the moment. Global self-index is third day. Gold going to new record highs as well, and that's everything we've got in here. Look, European futures fall on tariff woes. Gold at record high. Trump auto tariffs, threats on allies intensifies trade war. Wall Street straps in for Trump tariff reveal, sees no end to fog of uncertainty. This is the killer, the uncertainty around it all. S&P 500 ends lower as investors digest Trump's auto tariffs. Wall Street futures ends lower this morning on tariff woes. Inflation data on tap. That's the PCE data coming up. Stocks forwards, trade war, clouds economic outlook. US economy G2 for last quarter, but does it matter? Trump auto tariffs, threats on allies intensifies trade war. All we've seen already in here: stock struggle, gold at record highs, trade fears weigh. All the same headlines coming from Reuters and Bloomberg. Trump's erratic tariff policy shakes confidence in Europe's markets. Bull run. So European markets were looking pretty good in here up until the last few days, and then notably lower. Asian equities getting hit overnight in here. Nikkei 1.8% down, and the Hang Seng 0.6. European exchanges, UK FTSE hanging in unchanged in here with that GDP release earlier on today and positive retail sales data. But you can see in here German and French markets, the German DAX down and French CAC down around 0.5% this morning. And US futures in here heading south. Just over a tenth in here on the S&P and around 3/10 on the NASDAQ. So there's going to be a quick one in here, guys, because there's really not a huge amount to say. Unfortunately, it's all on the tariffs in at the moment. Now, we are hanging on to bullish outlook in here on our market chart. It's going into today on the reviews. But if we zoom in and you can see on the NASDAQ, we noted yesterday we were just holding above the 50% retracement here. That comes in around around the 19,940 area. We've obviously dipped just below that kind of at the end of yesterday and overnight, but rebound hovering around that now. I think, this is going to be critical now. This kind of trend line that comes up from the middle of March and the 61.8% retracement. If we get down now through those, so down now through 19,800 will be a real negative for the NASDAQ and really signal that this recovery we've seen since the middle of March is over and there's real risk to go back to the lows. Similar story with the S&P 500, although that's just dipped below near the 38.2% retracement as you see here, just dipping flirting with that 38.2% retracement, which is around 57.32. But it is flirting with that trend line as well. So slightly steeper trend line for the S&P. So flirting with that trend line. I think if we get down below the overnight lows in here, things are going to look a little bit worrisome, I think, for the S&P. So overnight lows I have in at, let me just check in here, 57.11.5. If it gets through there and then certainly down through the 50% retracement level, and I've got that 50% retracement level coming in right around 5,700. Yeah, so down through 5,700 in here, S&P starts to look a lot more negative. So watching those two levels in here does look a little bit worrying. So any kind of negativity coming out of the data, from the PCE data, anything slightly inflationary from this PCE data is going to be a negative. Anything negative on the consumer sentiment numbers or any further indications of additional tariffs or higher tariffs on them more than what we've already seen in here could send these markets notably lower going into today. So watching out for those levels I just highlighted. I said it was going to be a brief one, guys. It's been brief pretty much all week. There's really not been too much today. It's all about the tariffs and they're great unknowns, for the whole market. So it's a matter of just reacting to those. Know where your levels are. Be relatively careful with your stock placement in here, particularly, because the markets can jump on any kind of news. A tweet from Trump can change everything. So just watching out. You should be following all his social media channels and the any news coming out from the government, any of the government channels as well. All right, guys, I'm going to wrap it up there. I'm going to wish you all a great trading day. Take care, stay safe. I'll be back. Have a great weekend too. And I'll be back with another Bull versus Bear webinar on Monday. Bye.